Is it the right time to buy gold? Let's find out in this video. So what we know so far about the economy, both domestic as well as global. The first thing that we know is that from last 4 months due to lockdown, there was very little economic activity. Many small businesses have almost shut, people have lost jobs, and those who have a job, they are facing pay cut. So overall it's a tough time. People are digging into their savings. India's GDP is contracting and many other major economies are struggling too. That is why the US Federal Reserve, Bank of Japan, European Central Bank, Bank of England, Reserve Bank of Australia, Bank of Canada, all these major economies are printing money and injecting in the economy to keep it running. In my previous video, I have said that there is no news regarding Reserve Bank of India taking this same step what the other major countries' central banks are doing. It is also unclear how the government of India is financing the 20 lakh crore stimulus package that was announced in the month of May. In my last video, I have explained tiny bits of it, but overall still it is unclear what exactly the government of India is doing. Anyhow, so these are some of the facts that are available in the public domain. So let's follow up on this and try to analyze whether it is the right time to buy gold or not. The first thing that you need to understand is that the gold prices in India are determined according to the international market. The price of gold in US dollar is taken as a base price. Depending on the value of Indian rupee as compared to the US dollar, the price of gold is converted into rupees. In simple terms, regardless of what happens to the Indian economy, the price of gold is determined by what is happening to the US economy. One thing that everyone knows is that in the month of March, the United States had announced a $2 trillion stimulus package. Where do you think the money is coming from? Basically, their central bank, the United States Federal Reserve, is printing money to fund the stimulus package. The main problem with printing money is that when it starts circulating in the economy, eventually there will be more money in people's hands. If you have more money in your hands, firms will increase the price of commodities, goods and services. That will lead to inflation, meaning price rise. However, if the central banks can manage it well and stops printing money before inflation becomes an issue, then I don't think there will be any major problem. But one thing anyone can easily predict is that when this pandemic goes away and businesses start, things are going to be expensive. Today, when you go out to buy anything, you can see that the prices have increased. That means in the coming months or by the end of this year, inflation is going to rise. Prices will increase. On top of it, if the US is printing so much money, then obviously after some time when that money starts to circulate in the economy, inflation is bound to come. You can also call it post-pandemic inflation. The next part that you have to understand is that when inflation rises, the value of currency goes down. What it means is inflation increases the prices of goods and services over time. That in a way means the number of goods and services you can buy with your money will decrease. Investors buy gold to balance their portfolio. It is obvious, right? When your purchasing power reduces due to inflation, you will invest in gold because that's the only thing for historical reasons have been the safest investment. Therefore, people tend to hold money in the form of gold. That is why when inflation goes high over time, gold becomes a tool to control the inflation. When dollar is weak, people will buy more gold. That means a weak dollar increases the demand for gold. If you have been following the news, gold rates started rising since April. That means dollar currency was becoming weaker from April. That is how the demand for gold was rising. In the month of March, the United States government announced the $2 trillion stimulus package. Then we have also heard that the US government is printing a lot of money to support the stimulus package. Now this money has slowly started circulating into the economy. So give it some more time till it spreads nicely. That will slowly drive the inflation up. And we also know that every day gold price is rising. And my assumption is that it will continue to rise at least till the end of this year or maybe till the initial 3 months of next year. Because if you apply the dollar to gold relationship logic, it will tell you that the stronger the value of the US dollar, the lower will be the price of gold. Likewise, the weaker the US dollar, the higher will be the price of gold. Now the US government is not going to keep its currency weaker for a long period of time. And also the fact that the US election is coming up in the month of November. Depending upon which government wins, next year the US dollar will eventually become stronger. So if you have money, I would say invest certain amount in gold and keep it for the next 6 to 10 months and see if you can make profit. One more thing, when I say invest in gold, I don't mean jewelries, ETFs or GSBs. I mean in physical form like coins in bar. And by the way, buying gold is also not that simple. You have to be a little smart. You have to know about the purity and standards, so just be careful on that. You may get tricked or fooled by the dealer. You can also buy gold from banks, but the only problem is that banks will not buy back your gold. If you want to buy gold in any other form like gold bonds, they have a lock-in period. Inquire about that and then think about it. Gold ETFs is also an option. I don't know much about it. The only advantage of buying gold from bank or in the form of gold bonds or ETFs is that there is transparency in pricing, purity and standard will be 100% guaranteed, and there is no problem regarding preservation. And one last thing, there are many other factors that affect gold price. But in this video, my prediction and assumption is based on the current scenario that is going on due to the pandemic and also by looking at the macroeconomic picture of the global economy.